Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is a good friend of ours, Chris Vermeulen. He is the founder and chief investment officer at thetechnicaltraders.com. Welcome back, Chris.
Hey, thanks for having me, Ivan. Always a pleasure.
Yeah, thank you for coming down. I wanted to get you down and talk about everything that's happening in the markets. My first question for you, Chris, is you forecasted a potential super cycle in precious metals. What chart patterns or macro indicators support your current bullishness on silver and gold?
Yeah, well, I mean, I focus mostly on the technical side. So when we look at the charts, like from a long-term standpoint, there's no doubt gold or the precious metal space is in a bull market. Gold's got a very strong chart pattern. We're in, it's been a bit of a feeding frenzy over the past month, two or 3 months. People have really been piling into the space, and we've seen it really come to life. Gold was seen as pretty boring. The precious metal space was getting some attention, but we've really seen a lot of money move into pretty much all parts, the whole precious metal complex. We've seen money move into not only gold, but we've seen silver, big volume in silver, big volume in gold miners, silver miners, platinum and palladium. So it's not just people now kind of moving into one particular pocket of precious metals. It's like they want anything to do with precious metals, they're in. Even like different ETFs like XME, copper miners, anything that has the word miner in it has been getting attraction. And so that's one of the signs that we're in a super cycle. We're getting this kind of feeding frenzy of people wanting in. And from a long-term standpoint, we're really, we got a measured move. The next upside target for gold is about $5,100 per ounce US. So there's some pretty good upside potential once the gold kind of finishes kind of trying to shake the market out a little bit. The recent pullback, I think, for some reason caught a lot of people off guard, although it shouldn't have because the market was saying it needed a bit of a break. And
Right.
so I think it's stabilizing. So I'm bullish on gold here still.
With growing concerns about, rising yields, consumer debt, and unemployment, what are the top warning signs you see for long-term investors on the charts right now?
Yeah, the long-term horizon. I mean, I think the economic data might be starting to get a little more bearish, showing the economy might be kind of stalling out. And when there's uncertainty, we tend to see money move into defensive plays. Utility stocks are seen as one. We tend to see money move into precious metals. So that's the big thing. I think people are nervous. They're getting a little more nervous around the financial system are things going to break? Are banks going to have a struggle and all that stuff? So people are trying to get outside of the financial system and buy, gold and silver bars and rounds and things like that. So they don't have to worry about a bank going under or a stock market crash. I think the economic data is slowly coming around in terms of it's losing momentum. It's people, companies aren't having as great earnings as they're expected. Small cap stocks aren't performing as well. Like we saw a very sharp pullback in the last few sessions on small and micro cap stocks. And they had a nice bounce recently, but it's kind of looks like a bounce within a downtrend. It doesn't look like, this dip here it might not be in the equities market. It might really just be the start of a new downtrend. It's just a bounce.
Mhm.
So we need to see how things unfold from that regard.
Hello, my fellow silver and gold stackers. Please hit the like and subscribe button. It will really help the silver and gold community grow. It'll help this channel grow, and I'd really appreciate it. Back to the video. Some of your recent analysis points to, a possible reset or a crash or even a correction, akin to 2007 and 2008. If that happens, Chris, what steps should, retail investors take both before and during the downturn?
Yeah, I think you should have limited exposure to the stock market. I mean, we've had a very strong move up percentage wise, but the stock market isn't super healthy at this point. The Mag 7s are still doing most of the heavy lifting. Gold is telling us that there's something wrong. Something's going to break eventually, and there's going to be some type of financial crisis. I think going forward, people need to realize sometimes you need to step aside. Cash is actually a very good position. It's one of the best positions when all hell breaks loose and everything is collapsing. People will be more than happy to be sitting in cash without, being stuck in the stock market or commodities. Because if we do, it's more so when we get a financial reset. They're always going to happen. There's always going to be things that break and we have a financial crash. The question is just when. And I think people just need to realize that you need to have a game plan to know when trends change direction and when one of these may be starting so you can move to the sidelines. And I think precious metals is still the hot pocket. I still think we're going to see another big push and leg higher if you compare the price action of precious metal space with platinum, palladium, gold, silver miners to 2007, 2000, early 2008, it's almost identical type of price action. And it's telling us we should see another 30% move up in gold, potentially another 60% move higher in silver, platinum, and palladium. So I think this first pullback in metals is just the tip of the iceberg. I think we're going to see one more big push. But as you said, Ivan, if we do and when we do go into a reset, you do need to liquidate. You really need to protect your capital, protect your lifestyle. You need to just move to cash. And typically, when the market and the economy falls apart, the US dollar index tends to rally. So just moving to like the dollar index or just into cash like USD currency, I think is a very good play, even for an international trader. It tends to perform and hold up while the stock market and economy crashes.
Yeah, you often stress, capital preservation during high risk cycles. What practical risk management tactics do you use, especially when leveraged on inverse ETFs? You just go straight into cash, or is there any, other tactics you use?
When a trend turns around, like when it, say an uptrend turns around and starts to go down, our strategy will tell us, hey, the trend is over, let's get out. We have a hierarchy of different assets that we move into. So we potentially could move into like TLT, which is a long-term treasury bond. We could move into the dollar index itself, the dollar ETF index. We might move to cash. Those are the options, and we just need to see if any of those meet our criteria when the stock market rolls over. Now, when we are in a bear market and a big reset, we do trade inverse ETFs. So we actually profit from falling pricing, and which is pretty exhilarating. It's a very quick trade, and we tend to see the market fall very quickly. So when we get into inverse ETFs, it's a very emotional trade. You're in, you're out in a very short window.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
How do you avoid emotional, biases and the FOMO, the fear of missing out, when markets are surging or hitting new highs?
I mean, for me, I kind of learned through the school of hard knocks. I've blown up 3 trading accounts. I have made a bunch of money. I have lost a ton of money. And I just realized it comes down to managing your risk. I've lived through a bankruptcy. I've kind of gone to the top and the bottom multiple times.
Wow.
And so now I'm at the point where I just realized there's always going to be a new opportunity in the market. You don't need to pick tops or bottoms. It's not about how much you make. It's how consistent can you make it, and can you keep it when things get ugly, right? And if you don't lose a lot from market corrections, then you don't need to also swing for the fences and hit home runs. You just need a bunch of first, second base hits and just continuously kind of compound your growth throughout the year. You trade after trade, just growing on top of that.
Yeah. Where do you see the most opportunity for traders and investors in 2026? Looking a little bit into the future and beyond, giving today's obviously volatile setup, where do you see the most opportunity? Would it be in precious metals? Where would you see it?
If we're looking forward a few years, there's going to be a lot of opportunity. So if we have a financial reset, the real estate market is going to be great. And I've talked about this, not just buying real estate, but you could actually buy the REITs. The ETFs themselves actually provide, I could argue, a lot more opportunity than buying physical real estate itself, because what happens with a REIT is when the ETFs fall, like IYR, for example, it can fall 70+% in a bear market. The dividends are huge. You could be getting a 10, 15, 18% dividend on those, buy into them, and they can double or triple in price over the next bull market run, which can happen in a fairly small period of time. So I think there's going to be amazing opportunity in real estate and real estate ETFs. I think the precious metals and miner space is going to be huge. Probably see uranium space because of energy demand and all of that stuff, and clean energy. I think that will be a huge opportunity. The stock market, will also be an opportunity. This is the nice thing is if you can keep your money while everything crashes, you can reinvest into almost anything and it's going to be a killer deal. The problem is most people buy and hold and they're stuck in the market. They ride it down and they always say the same thing, like, I'm down so much, I just have to ride it out. I just have to hold now. And that's what I allow people to avoid. It's a huge kind of transformation, the different style of investing that I do, where we step aside, everything collapses, and then we're like a kid in a candy store. We're an investor looking at like all of these investments. Like, I'm going to go put a bunch of money in a real estate ETF. I'm going to buy precious metals and some miners, and I'm going to, move into this and that and the other thing. So if you can keep your money, which most people can't, that's the unfortunate part of the market. They lose everything when the markets crash. Everything is an opportunity. That's
Yeah,
that's the reality of it.
no, absolutely. That's a great advice for everyone. Chris, I want to thank you so much for coming down and speaking to the community. Before you go, though, where can they connect with you?
Yeah, the best spot would be just on YouTube. The Technical Traders is my channel, or you can go to my website, thetechnicaltraders.com, and I share my portfolio, my exact trades that I do. That's my newsletter. Really just ride my coattails. I ride the coattails of the market. You guys just copy what I do, and I share my thinking every day in a morning video.
Yeah, no, I love that. I highly recommend everyone to go follow your work. Chris, thank you so much for coming down. It's always great having you come down, and as the market develops, love to have you back on.
Awesome. Sounds great, Ivan. Take care.
Talk to you later.